Kitco News on-site coverage of the Vancouver Resource Investment Conference is presented by Discovery Silver.
Ladies and gentlemen, we are coming into the end of the daily doldrums, and we are looking at what opportunities we have here going into the FOMC statement and then into the rest of this week. As we were going into the morning, we were looking for this pullback that was coming out of a previous high, and it was actually leading us into a gap fill that was below us. And the question was at that point was whether our leading indicators and then the indices' own unique trends would continue to defend here and lead into the continuation of that longer term timeframes targets, which is up at the 71.39 and the 71.56 75s up there. And that if we were to start to break through our leading indicators, the dollar, bank, and the VIX's setups, that you could make a case here that this is looking very much like the previous highs that we had made in 2025, which started a very significant downturn after dipping into our previous highs. What is similar about this moment is the correlation with the Federal Reserve's rate cuts. We had September rate cuts. There's on average 11.07% rally after the Fed starts cutting interest rates, and then there's has a tendency of being a 20% decline. It was a 10% rally, a 20% decline. We had another September rate cut. They paused and then they again started all over again and cut rates in September. And the 11.07% rally is right around the 33 or 73.30s. It doesn't have to rally 11.07%. It rallies until the trend breaks. And that's what we're going to discuss here today. We're going to start off here inside of the DXY chart. And one thing to note about DXY, and you're looking at this from the perspective of the monthly timeframes, is that we're in this massive support level. It is actually a dollar strength setup that you can make a case. These white ovals that you see here have interestingly and conveniently correlated with the beginning of the crypto winter, which has caused Bitcoin in its other previous cycles to dip 80%. The question here as we were moving into the overnight time frame is whether the dollar continue to goes down in extensions. If it does, everything continues to rally. All of the markets with a negative correlation continue their rallies. What has a negative correlation right now? Negative correlations exist inside of the indices, the currencies, gold, silver, and crude oil. Notice that Bitcoin does not have a negative correlation right now. It is more of a positive correlation. So the dollar's extension short below the 97.217 represents where there is a continued tailwind for the indices, currencies, and gold, silver, and crude oil. The bearish below line in the sand here is the 97.217, and we're squeezing up into it. This is what was helping the indices make their pullbacks here today as we were going into our morning. We had these little counter trend longs from lows, and we're getting very close to that resistance. The inverse of that is the euro trading its daily extension short, its daily extension long. And where you can see here that we're running right into that support where DXY hasn't traded it yet. This stream continues at eMiniAddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.